Hi, Joe Manausa here with another housing market update. Today's April 4th, 2020. Here's what we're going to cover in this brief video. We're going to talk a little bit about past market conditions, present market conditions, and then we're going to speculate a little bit on what we see happening in the housing market in the coming months and years. Okay, let's start with the past. When we look at our first graph, we see that the market was up 4.1% in the first quarter. When you look at first quarter performance versus past years, you can see there's only been 4 years that have outperformed this year thus far. That's a strong market. When we look at March as a standalone month, we see that so far sales are up about 2%, and we still expect some late entries to hit the records for other sales that closed in March. So March was up about 2%. It's a good month. So present market conditions. The first thing I look at when I want to talk about the strength or the health of the market is supply and demand. How are home sellers and home buyers competing on the real estate battlefield, so to speak? When we look at the relative supply of homes, we see we have less than 4 months supply. What we're looking for in a balanced market, when we say that the market is at equilibrium, there's 6 months of supply. Well, right now there's only 3.8 months of supply, and that means there's not enough homes. That very clearly means it is a seller's market. Now, the market doesn't apply at all price ranges in all areas, but overall, we're definitely in a seller's market. Now, if you want to just look at the high end of the market, the homes that are priced above $600,000, it's the opposite. We're still in a buyer's market. Right now, there's 8.8 months of supply of high-end homes. When we break the market up into quadrants, we look at Northeast Tallahassee, Northwest, Southeast, Southwest. What you're going to see in the numbers in front of you is that areas that are shaded in red, those are price ranges in which we're definitely in a strong seller's market. Areas that are shaded in orange is a very strong buyer's market, and areas shaded in green are a balanced market. Now, if you look at some of those green numbers, you'll see very, very low numbers, and you'll think, gosh, why isn't that a seller's market? And that's because if you look at the next price range up, you'll notice that there's a lot of supply there, and a lot of those sellers are going to be lowering their price and dropping down into that price point. So this is pretty much a picture of supply and demand in the market today. Okay, outside factors that influence home sales. Obviously, mortgage interest rates is a big one, and right now we're very near historical lows. Michelle and I just refinanced on our home, and we got a rate I never thought I would ever see. So mortgage interest rates right now are strengthening the market. And even though there's a pandemic going on, March was a very strong month for home sales. Joe Manausa Real Estate had its best month going back over 2 years. When we look at news stories today under outside factors, obviously we've got to think about the economy. The pandemic has sent everybody home and the economy is struggling. So how the U.S. government responds to this, how much money they pump into the economy, is going to determine how quickly we're able to recover from this. Presently, the coronavirus has not negatively impacted the market. I know it's hard to believe, but the market was up in March, and based on the sales we saw in March, I think we're going to see something similar in April. But now let's talk a little bit about the future, because that's a whole different story. I believe at some point, this pandemic is going to stop the market in its tracks. There's going to be third-party providers that have to stop service, and that will slow and finally grind the market to a stop. We're looking at people like moving companies or home inspectors, people who have to spend a lot of time in a home and put their hands on a lot of things. I'm not sure the moving van companies are ready to have their employees wearing hazmat suits to move furniture into heavy trucks and transport it into new homes. So that's something we're keeping a close eye on. But eventually, we believe there's going to be a market shutdown. And what's going to happen during the shutdown is there's just not going to be any sales, no new contracts, and no closings. So there might be a huge pipeline of closings waiting to happen, and then everything's going to be put on hold. If you're an active buyer in the market right now, if you're an active seller in the market right now, Be ready to be flexible. Be ready to renegotiate the closing time frame on your contract if the shutdown does indeed occur. Okay, following the shutdown. Now, how long is this shutdown going to be? Is it going to be a couple weeks, a couple months, a couple quarters? I can't say. But following the shutdown, there'll be a restart. And the best analogy I can give you for the restart is looking at the toilet paper market right now. It's still hard to find toilet paper in stores. Why? Well, someone got the idea that they better get a long-term supply of toilet paper, and so they started buying it up. Other people saw those people doing it, they did it too. Before you knew it, today's supply of toilet paper was gone, and we now had to wait for manufacturers to start bringing us tomorrow's supply of toilet paper. Well, you're going to see something similar in the real estate market, but we're not going to talk about the supply of houses that people are going to run out and try to consume, but rather the future supply of money. The Fed is going to keep rates low. The mortgage interest rate market is going to be incredibly low, and people are going to come out of the woodwork trying to lock in houses at these low mortgage interest rates before the Fed raises rates. And the Fed will definitely raise rates. The biggest issue this pandemic is going to have on our economy, forget about the real issues that we're facing, but on our economy, is that all this inventory of money, all this extra money coming into the economy from the government is putting us at risk for hyperinflation in the future. And the way the Fed can control the way that inflation hits us is by raising interest rates. So low mortgage interest rates aren't going to be around forever. And I think buyers are going to flood the market trying to get into homes once the pandemic threat has moved on. When will it be business as usual? I'm hoping business as usual will resume this year. How long will it take? I'm just not an expert at pandemics. I have no idea. But I am fairly confident that we'll see the market shut down. We'll see us go through a restart phase, and then we'll finally go back into business as usual operations. You might wonder, well, what should I do? Well, if you like your home, I would talk to a mortgage lender about refinancing it. I wouldn't necessarily be in a huge hurry, and right now the mortgage industry is swamped, but get a file started. I mentioned Michelle and I just refinanced our home. We worked with Mitch Wright of Bay Capital Mortgage, and I strongly recommend Mitch. He did us a great deal. I recommend you get a file started with him. Maybe you'll close in 3 months. Maybe you'll close in 30 days. Get a file started. If you love your home, get these low mortgage interest rates. They're incredible. Now, if you're thinking about moving, sit down and talk with a trusted real estate agent. Sit down and talk about the value of your current home, what the future market for your home looks like. Look at where you're wanting to move and what the inventory for homes in that area look like. Put a plan together. Right now, you've got extra time on your hands. Spend a little bit of it putting a real estate plan together if you think you want to move. Okay, so now for the big question. Do I anticipate there being a housing bubble? Well, the short answer is no. Why? Well, let's look at the definition of a housing bubble. A housing bubble, or real estate bubble, is a run-up in housing prices fueled by demand, speculation, and exuberant spending to the point of collapse. At some point, demand decreases or stagnates at the same time that supply increases, resulting in a sharp drop in prices as the bubble bursts. That's just not what we're facing right now. Right now, our demand is relatively normal. We have 4 years in our past that were higher demand than this, and our population has grown since those years passed by. Additionally, it's not like buyers are going to leave the market without sellers leaving the market. We have most sales in Tallahassee are local sellers selling their home and then buying another one. So if they leave the market as a buyer, they're also leaving the market as a seller. The only way we're really going to see inventory run high is if the builders start building like crazy, and they've been underbuilding for the last 10 years. So no, I don't see a housing bubble in our near future. All right, there's some key references if you are active in the Tallahassee real estate market. If you want the most current supply of homes for sale, our website is updated multiple times per day. You want to see the inventory out there, go to www.manausa.com. That's MANAUSA.com. Now, if you want a sneak peek at what's going to be hitting the market, go to ComingSoonHomesTallahassee.com. That's ComingSoonHomesTallahassee.com. There we show listings that will be hitting the market in the future, and you can get a head start on the competition by looking at those homes. And finally, follow us on our Facebook page. We post quite a few things every day, so there's always something to look at, whether it's new listings, back on the market listings, price reductions, or even articles that are filled with information that will help you save money when you move. Make sure you check out our Facebook page, and that is just facebook.com/Joe Manausa Real Estate. And finally, you can always reach us by phone. We are at 850-888-0888. That's 850-888-0888. Stay safe.